Let's break those numbers down now with Bright Khumalo from Investec. Bright, as always, many thanks for your time this evening. Let's start with the overall market performance, closing marginally in the red, and then I also see the rand holding its own against other global currencies despite those GDP figures that we saw coming out yesterday.
Yes, I mean, those GDP figures were quite grim, showing that, the year of 2020 wasn't a good one for us, especially considering the fact that we're already not doing well on that front in terms of growth. And there are no signs of, a massive, sort of 5% recovery or so for our local economy, which is quite interesting if you had to compare that, for example, with North America, which is, the USA is predicting a recovery of, GDP numbers north of 5%. I just find it mind-blowing that an emerging market can't, compete in terms of, growth with, the West like that. It just doesn't make any sense. But looking at the markets today, like you said, the JSE down about 0.5%, resources down 1%, industrials down about 0.25% there. But, the shining light has been those financial stocks which closed up 1.3%, and I guess it has to do somewhat with the strengthening rand there. Looking at the top 40 winners and losers, Old Mutual are up 3.4%, Discovery up 2.9%, and Pepco Holdings up 2.9% as well. While like you said, gold stocks, and other mining stocks such as South 32 down 7.6%, Goldfields down 7%, and Kumba Iron Ore closing down 5.6%. The rand is at 15.17, much stronger than it was this morning at 15.32 against the US dollar.
Right, let's get on to some company news now, Bright. MTN creating or attracting 29 million new customers, reporting a solid set of results, but this is very expected from MTN, which has done this continuously for a period now.
Correct. I mean, headline earnings up 60% year on year, like you're saying, in line. But, the revenue number was the one, that attracted a lot of attention, considering the fact that it beat on revenues. We're talking about group service revenues, up 19.9%, showing that people basically were using more data, while working from home or during, lockdown and all the way to December, which is good for this company. Again, the big issue there was the fact that, the dividend, the final dividend of, of around, historically of 2.60 cents, that was cut. And obviously this is disappointing, especially for the BE structure, which is very dependent on, getting this dividend to lower down its debt. So it's going to be interesting how, the management of MTN and the board of MTN is going to negotiate with the MTN Zakhele Futhi, management and the board members there to say, they have to meet halfway, because that's quite interesting, because it's, like I said, its main source of income is the dividend from MTN. But the reason for that obviously is, not being able to repatriate cash from Nigeria, which is not a good thing. And this is not, a problem that is unique to MTN Group, but it's actually, a common problem if you operate in Nigeria currently.
Right, and then finally, Bright, let's look at Growthpoint. They're putting through some figures today. Did report a little bit of a increase of about 9% in total vacancies. And of course, it's just an industry you don't want to be in right now because of the changing way people are working, which is actually not from the office.
Yeah, look, you mentioned a very good problem. I'm sure these guys are going to adapt, but I think the biggest hit came from, the pandemic itself. I mean, distributable income is down about 31% to 73 cents, 73.1 cents there. And, DPS down 44.8% on the year-on-year basis. It's not looking good. If you go, and dig deep, into the numbers of Growthpoint, you'll see, like you said, vacancies in the office side of things, 18%, not looking good, going in the wrong direction, and 8% in industrial properties, which tend to be actually, one of the most resilient in a property portfolio. Again, it shows that some companies had to fold and they had nothing to do because they were not operating during, those hard lockdowns. In terms of some of the anecdotal evidence showing that, the lack of tourism in South Africa is affecting these businesses. We saw, the VNA asset, which they own 50% of, they suffered disproportionately, in terms of the rest of the portfolio because, like I say, it's very dependent on tourists. And as long as there's no tourists there buying those Louis Vuitton bags in the V&A waterfront, unfortunately, we won't be seeing those triple net leases actually going down to profit for a company like Growthpoint.
Very, very interesting insights. Very dim outlook for a company like Growthpoint, which owns such a key tourism area, like you say, the V&A waterfront, where people go and buy Louis Vuitton handbags, you said there, right? That's a Bright Khumalo from Vestac giving us a wrap of your Markets Day.